Today we're diving into the latest trade alerts from Seeking Alpha's Alpha Picks, where they're selling off Meta platforms and buying into a lesser known gem called Zeta. In this video, I will break down why Alpha Picks are making these moves and whether you should be following their lead. But before I move on to the trade alerts, if you want a whole review on Alpha Picks and what it is all about, you can check out my beginner video on the top. And one more thing, if you haven't done so, do join my free weekly newsletter where you will get tips on the US and Singapore stock markets, stock ideas, analyst reports, and many more. You can find the link down in the description box below. So without further ado, let's jump back to the video. We are here in Alpha Picks. Alright, so according to their latest trade alert, they are selling off Meta platforms. Yes, the same Meta that has been a heavyweight or one of the Magnificent Seven. Alright, so but why? Let's take a closer look at the Alpha Picks methodology. Right, so over here they said that their removal from AP portfolio, Alpha Picks portfolio is due to their whole rating. Okay, so it was added on 15 August 2023. Okay, so it's been around 1 year. Okay, the decision was made on 20 August 2024, and it has remained a whole rating for 180 plus days, which warranted the close out of the position as an alpha pick. And if you want to know how they derive this whole rating, okay, you have to go to their philosophy first. Okay, you have to go to their portfolio process, whereby when they have this stock rating, okay, and coming to the whole rating and remaining there for 180 consecutive days, the Alpha Pix portfolio will sell off the investment. Okay, if they have multiple investments, they will sell off the initial investment. Okay, and the whole rating is determined, okay, by this quant. Okay, but it's like a black box lah, which is inside Seeking Alpha itself, but it is made up of a different mixture of factor grades, which is valuation, growth, profitability, momentum, and revisions. So we can see from here that Meta platforms have performed relatively well in the other four sectors other than valuation. So valuation is the one that pull it down to a whole rating for Meta platforms in the past 180 days. Okay, you can see that they have this whole rating. Okay, and it has been the same for the past 180 days, with the valuation being a critical component, right? And that's the reason why they decided to sell off the stake. Okay, and they mention here that it is a stretch sector relative valuation matrix that drag down the quant rating to whole. All right, so they further explain, right? So the what is Meta Platforms about, how much returns they have delivered. Okay, they continue to showcase strong fundamentals and earnings growth potential, but the valuation grade weigh on the overall quant rating and kept it in whole territory. And they have a framework, right? The best part about Alpha Pix is it's not that they, like, let's say they have a very strong stocks and they will just keep buying it or holding onto all these stocks. They have this quant rating which they follow very closely too, and this suggests that when some particular stocks, although it's a very fundamentally strong stock, okay, like Meta or Google, Tencent, they are all these tech giants, so long you don't meet the rating, okay, you will be liquidated from the Alpha Pix portfolio. Okay, so they have a very stringent buying criteria as well as selling criteria, and this is the whole selection process that has enabled them, all right, to beat the market. So if you see, um, okay, so there are quite a lot of comments, 80 comments below. So given by all the, Alpha Pix subscribers. But if you were to see their performance so far for Alpha Pix, that is how they have managed to beat the market, right? 127% compared to S&P 500 of 49% since inception. Okay, because they have stick to their investment methodology very rigorously, and that's why AlphaPix is able to beat the market. So I'm not, saying that they are at fault for selling off Meta platforms, although it's a strong stock and things like that. But when it comes to having a very stringent process, you have to believe in the process and you have to, act upon it when the system tells you to do so. Second part, okay, let's talk about what they have bought instead of Meta. So they have bought into this stock called Zeta. And if you have enjoyed this video thus far, I will greatly appreciate it if you can help me to smash that like button, subscribe to my channel and ring the bell so you get notified every time I release another stock analysis video. Talk about Zeta, right? A new stock. Let's talk about the portfolio process or alpha picks. What is their buying criteria? So to refresh our memory, right? Alpha picks uses a data-driven process. Same thing when it comes to selling, right? So buying, they also use a data-driven process, right? And the pick must meet these following criteria. So for quant rating, they have to be a strong buy. Okay, for at least 75 days, US stock not read, market cap greater than 500 million, greater than $10, and has not been recommended before. So all the others are pretty, common lah, right? Is the only thing that stands out is the strong buy quant rating. Let's take a look at Zeta. So if you haven't heard of this stock before, okay, they done a very good business overview here. All right, so Zeta is a fast-growing cloud-based computer that helps businesses to so-called acquire customers or retain customers using their data-driven platform with the kind of AI or consumer intelligence and things like that. So even though I went to the website, I check out Zeta, what is it about? I still don't really understand, okay, because it's mainly B2B kind of a business model. Basically, they help all these companies to do personalized marketing, okay, using a different set of channels or offerings, okay. And what is more important is that it is a pick that is a strong buy lah, when it comes to alpha picks, right? And it has crushed the market in terms of both the stock market and the tech sector in the past 1 month, okay. And okay, coming to the Zeta stock valuation, they are remaining at a C plus, so not as expensive as compared to Meta platforms, which was F and then D, right? So Zeta is trading at PEG ratio of 1.26 times versus the sector 1.88 times. So it's relatively cheaper, okay? And they are okay. So AlphaPix also did like this very incredible write-up with their buy thesis. So even though I know that once they have this quant rating, uh, which is strong buy, right? Typically they will add it into the portfolio. But nevertheless, okay, it's good for us to understand. Okay, what is the thesis all about? So basically, their revenue and earnings, okay, cash flows are gaining very good traction, exceptional success. All right, 10 straight quarters of more than 20% revenue growth and 14 consecutive quarters of expanding EBITDA margins. So basically, it is a very strong growth stock. Okay, you can see from here, right? Moving on, right? So everything seems very nice. Okay, their revenue is expanding double digits every year. Their free cash flow is positive and also increasing. From 2020 is 10 million, and right now is around 55 to 80 million, and they are targeting 110 million in free cash flow. Okay. Okay, so there are also the potential risks, right? Technological sector is highly volatile and in competitive and things like that. But nevertheless, okay, they conclude that it is a growing, okay, I would say if I want to add in my own words, is a fast growing, industry leader that uses AI. So it's a AI powered, and it has continuously top earnings expectations. And with all this in mind, all right, I believe that it will continue to grow, and this is a good, at least it's something unique, rather than when we talk about tech giants, we always talk about the Magnificent Seven. So Zeta is like a hidden gem that if AlphaPix haven't had this methodology of adding strong buy quant rating stocks, I wouldn't have chance upon Zeta for me to do a deeper analysis on. Okay, so AlphaPix has outperformed the market by a wide margin, right, since inception. And whether it's worth it, I would say that if you are investing, 5 digits, 6 digits, what is $500 if it can help you to outperform the market by such a big margin? All right, all these constant, alpha picks, stock ideas that they give 2 ideas every month. They have consistent write-ups, portfolio reviews. You can check out the comments from other members as well. I believe Alpha Pix is really worth it. If you are ready to give it a try, check out my affiliate offer in the pinned comment down below, or $50 discount or any other promotion they have from time to time.